Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 7th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since the O'Neill follow-through days on April 22nd and 23rd. Check the trend gauge over here. We've got the coveted four green arrows. However, the extended conditions on the indexes, specifically the S&P and the Nasdaq 100 above their 21 and 50-day moving averages, caused us to put this yellow caution on short term and medium term. And that just is our way of saying, yeah, today's not the time to pile into a bunch of names with the extended condition if you are underinvested. Uh, the market, uh, with it being closed on Friday, had the futures overnight into Friday. They did trade, and there was a pullback there. That pullback continued when the Sunday night futures opened. We're down 0.35%. No big deal there at the open. Then twice throughout the day, the trading day, there were some tariff letter uh, tariff letters to other countries that made the news with higher tariff rates. And the market sold off twice on that, but bounced a bit into the close. Bottom line is you got bad news from an extended condition. And when that happens, it can't be any type of surprise when you pull back. Now we finished red, but our title or our highlight for what happened today is in yellow because all in all, relative to where the indexes were, this is just a normal pullback from an extended condition, and leaders acted fine for the most part. Mixed bag, but no damage done. Here are the numbers. 21 over 21 up an average of 0.51%, 12 up, 9 down. That certainly goes into the opinion that we have on the market today. There was just a normal pullback with leaders being fine. Turbo-12, this is more volatile, down 0.91%, but again, mixed. 5 up, 1 neutral, 6 down. The big eight, much lower by 1.45% on average because of Tesla being down 6.8%. The RG8s, our 8 growth ETF composite, normal pullback down 0.81%. S&P down 0.8, equal weight S&P about the same. NASDAQ 100 down 0.75%, equal weight down 1%. Dow negative, mid caps and small caps pulling back as well, still above their 200-day moving averages on mid and small, and Dow a normal pullback as well. We'll look at the charts in a moment. Global 60/40 stock and bond down 0.6%. Our flagship GROTECTION portfolio down 0.5%, and TURBO-TECTION down 0.69%. A few buys and a sell in each of the portfolios. We'll talk about that when we get into the tail of the tape. Reminder, please, we're seeing our YouTube counts go to highs, but the percentage of likes relative to views is on the low side. We'd appreciate it if you like what we're putting out there. And we're guessing that you do because there aren't a lot of complaints in the comments. If there's something you take issue with, certainly let us know. We can discuss it. But we're asking to please like, share, and subscribe our content. We're on Instagram, TikTok, X, and YouTube. Let's get to the charts. We'll start off with the S&P 500. And after this 7 out of 9 days bounce straight up off the 21-day moving average, certainly a normal pullback, didn't even touch the 8-day exponential moving average. Really nothing to complain about here. As I mentioned, here's equal weight, did touch the 8, but bounced off there and finished mid-range. NASDAQ 100, pullback, normal to the 550 level, didn't touch the 8 EMA. Equal weight NASDAQ, also a pullback, didn't touch the 8. Let's go to the Dow Jones Industrial Average. Normal pullback, wide range, but didn't touch the 8. Let's go to mid caps. Normal pullback, didn't touch the 8. And it's normal. It's especially with a double shot of headline bad news. Here's the Small cap, Russell 2000, normal pullback, didn't touch the eight. If you're above the 8 day moving average, you really can't complain about anything. We did get extended, as I've said, and that's why we put that caution on. 6.7% above the 50 day on Thursday, the shortened day. Now that's down to 5.5%. We really want to see this closer to 4% before we take that caution off. Anything between 5 and 6 is still historically extended. As far as the QQQ goes, still 6.7%. We want to see this closer to 5.5% before we take off that extended condition yellow light. So those are the major indexes. How about some inter-asset correlation? Let's start with the VIX. VIX was up 1.8%, 17 handle, kind of normal action. You'd expect it to bounce with the market pulling back. The dollar up on the day 0.19%. How did that impact precious metals? They closed at the top of the range. They gapped down at the open and the dollar gapped up. As the dollar pulled back, gold and gold stocks strengthened. So we've got three moving averages tightened up here, the 50, the 21, and the 8. This could go either way. It's a consolidation. It had a nice run higher. We're keeping an eye on this to see if we break below this downtrend line and make a highs to break out of the base, or if we roll over, and we'll be keeping an eye on the dollar. That may have an impact on that. Gold stocks, as I said, this is an outside positive reversal, gap down beneath. Let's look at the 5 minute here real quickly. Gap down beneath the key moving average, and then just rallied all day from 5 minutes in. So we were eyeing these as a possible short, but that was good action today by the GDX. Silver, not a lot to talk about there. Undercut and reclaim the 8 EMA. Bitcoin, still in a tight range as well. Pulled back 1.3%. Let's move on to bonds. BND. Bonds down, that means yields higher. And this is the fourth consecutive day of bond prices dropping, meaning it's the fourth consecutive day of broad bond yields rising. Here's the long bond, the TLT, also down, meaning the TYX, the 30-year yield, is going to be higher, and it was, as well as the 10-year yield higher as well. Keeping an eye on those yields, as I said, 4 straight days higher. Let's go to the tail of the tape. What stands out here? Pullback in the percent above 5 days. It was 80. It's 43 today. It's not at either of an extreme, which is why we have it highlighted in yellow. I mentioned the news with the higher tariff levels. Keys coming into today were the index is the ADMA on the downside and all-time highs on the upside. We're pullback from all-time highs, still maintaining above that 8 day moving average on all three of our keys here, that being the S&P, the NASDAQ 100, and the Russell 2000. Up 7 out of the last 10 days, and 10 closes above the 8 day moving average, 50 closes above the 21-day moving average. Historically, that's certainly on the longer end of it, but we've seen it significantly higher as well. As far as sectors go, to the downside, or sorry, to the upside, utilities, crude oil, and aerospace defense names. To the downside, 10 out of 11 spider sectors, semiconductors, biotech, and emerging markets all weak. Portfolio changes, GROTECTION, we stopped on NBIS. Let's take a look at this chart. Sometimes they just don't work. And this is a case of where one had a very nice move higher after earnings. You can see here with volume, follow through to the upside, normal consolidation, bounced at the 21-day moving average, which is a good low risk entry, and had a nice couple of day, about a week bounce off there up near highs, but then a big negative reversal last week and couldn't get back above the declining 8 day moving average and gave up the 21-day moving average. Basically, we were just stopped out on this for a 0.10 of AUM loss, about a six. It was a 1.5 percent size in GROTECTION, about a six between 6 and 7% loss. Paper cut. We're okay with paper cuts. We did start Uber and we added to Hood today. I'll take a look at those charts when we get to the 21 over 21. TURBO-12 also stopped on NBIS, bought Rubric, RBRK. Let's take a look at that, as that is not in the 21 over 21. It very well could be, but we already had a security name in there. But this is a very nice bounce off the 50-day moving average, reclaiming the 21. Absolute great low risk buy. Can't complain about this in any way, shape, or form. I mean, look, what we try to do is we love riding things higher above the 8 when the market is in a very strong uptrend. Stocks tend to obey that 8-day exponential moving average. When it rolls over, that's a bit of a red flag, at least in the ultra short term. Then you want to see what happens when it gets to the 21. And this quickly broke the 21, reclaimed it, broke it again, and then it was just playing badminton above that net. But when we came into the 50-day moving average, bounced there and now reclaiming the 21. So good low risk entry there on this rubric buy. So the stats now: GROTECTION 1.39%, RVAB 5.79% balance at risk, GROTECTION 1.71. Volatility adjusted beta 5.55%, balance at risk. Bottom line on the day: it was a red day, but a normal pullback from extended conditions, and leaders acted fine. Keys going into tomorrow: S&P, NASDAQ, and Russell against their 8-day moving average to the downside, and all-time highs for the S&P and the Qs to the upside, and that recent high of 2249 for the Russell to the upside. Let's get into the new stock lists for this week. And we'll start with the TURBO-12. So this is a list curated by Ted and Connor, and we'll go through. They own one of these names, LEU. We'll take a look at this one first. Nice. They did some offensive selling in here as it got extended to the upside. Waited for the pullback, undercut, reclaim of the 21, and several bounces off the 21 since then. Nice day today, reclaiming the 8. LEU looks great. Next up is AAOI, hanging on the 8 EMA on this pullback. Very nice volume patterns and relative strength. AEVA, actually, I think they punted AAVA. They did, and put in ASTS. Let's take a look at that. ASTS pulling back. This is a rival to SpaceX. They compete for contracts, pulling back after a nice move up, breaking out of this cup base. Next up is Dave, bouncing off the 8 EMA, INOD, forming a nice tight pattern here above the 21-day moving average. KTOS pulling back and bouncing at the 8. Lemonade bouncing at the 21. Oddity, nice tight action above the 21. OUST, this is a LiDAR company. So is that other one, AEVA, that I mentioned, but don't need to have two LiDAR companies on in a 12 stock list. So that's why the guys flipped ASTS, but OUST pulling back nicely to the 21 after a decent move. QUBT pulling back, forming a nice little consolidation, 3-4 week consolidation, and Sedge tight pullback inside day after a big move up last week. And SEZL is the final entry, and that is just riding the 8 EMA higher. Let's go to the GROTECTION 21 over 21 list now. We'll start off with what we own. Palantir undercut, reclaimed the 8 and the 21-day moving average today. GEV, nice shakeout against the 21 last week, up near highs again after that. Hood, we added to this today. 60-minute stochastic cross. Let's show this setup here. Here's 60 minutes, and let me show the stochastic. You can see there starting to hook up on 60-minute and on the 30 minutes. It did complete the hookup. So added back some that we trimmed when it was extended last week. Let's take the stochastics off so we can see charts a little bit better. So added to that today. Spotify, two undercut and reclaimed the 21-day moving average and getting back above the 8-day moving average today, showing some nice relative strength in a red tape. Nvidia, very tight day, looks great. Jack pulled back to the 8 EMA. Uber, as I said, we added today, breaking above this flat base with volume. This has been acting very well since they announced that partnership with Waymo on this gap up day here inside the base. Here's the rest of the list. CoreWeave pulling back nicely on lower volume to the 21. Zscaler, if you look on the weekly, this is a 3 weeks tight followed by looking at another 3 weeks tight. See if that can be a launch pad for this to go higher. Light, nice pullback. Credo consolidating. DoorDash undercut reclaimed the 8. Net, three inside days against that big candle on last week's leader shakeout. VST, kind of the same thing, 3 candles, very close to inside versus last week's shakeout. PWR, new highs, slightly red on the day, but holding the 8. Coinbase, holding the 8 on its pullback. CCJ, undercut and reclaim the 8. Axon, tight action here, right around the 800 level. So these are the new ones this week. AVAV, great earnings report. This is a drone manufacturer. 4 up days after that, they did a secondary. That's what caused this pullback. What we're saying with adding this to the list is this pullback is enough. You can see our alert here on AVAV above today's highs. Should if the buyers decide to come back in after the secondary, this is the place where we would expect them to do it. FCX also added. Copper stocks and copper have been acting well, showing some relative strength after this gap up a little over a week ago. And SoFi acted really well in the financial sector. Great earnings growth, not overly expensive on a peg basis, making new highs. We'd like to see a little bit of a pullback on this, but a nice up day in a red tape. And that's your 2121 list for this week. And that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart. That's Dan@revereasset.com. Both of our portfolios are flagship GROTECTION and the more aggressive TURBO-TECTION, designed to grow assets during uptrends, protect them during downtrends, and we tell you exactly what we're doing every night on video, as well as why we're doing it. If you have any questions, reach out to us. But with that, I will wrap it for Monday, July 7th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.